We're taking a look at the currency market now with Michael Keenan, head of Forex Research at Standard Bank. Thanks so much, Michael, for joining us this morning. So the Rand seeing some strength come through yesterday, investors coming back into risky assets to some extent. But if that upward movement that we saw on the gold price that happened in tandem was anything to go by, we are still in a very fragile state right now.
Good morning, Alishia. Yes, I think the Rand's not out of the woods by any stretch of the imagination at this stage. There's still a lot of uncertainty as to whether or not we're going to get any kind of concrete solution to this European debt crisis. There's obviously been a lot of rhetoric, but nothing really substantial has come to the fore as yet. And also we've still got a lot of concerns about this global growth outlook. We saw yesterday consumer confidence figures out of the States coming in below expectations. And if we are looking for a consumer-led recovery in the world's largest economy, I think we're still going to be waiting for a number of months. So no, I think we've seen more of a technical retracement in this dollar rand down to that kind of 775 area. But I'd be buying dollars at these levels, looking for a move back higher again.
We were talking yesterday, though, about low liquidity levels that persist on the markets, with some dealers nervous to actually take positions given all the uncertainty that's still about. So emphasizing the need for a cautious approach here, where the moves we are seeing are wildly exaggerated, one would assume, because of the kind of volumes we're seeing come through the market.
Absolutely. There's so much uncertainty out there, and we saw once again dollar rand volatility level spiking to very high levels, more than most of the emerging market currencies out there in the past a week or so. And it just reminds us of how volatile this rand can be. And we've seen it with our customers, how both on the importers and on the export side, a lot of people preferring to stay on the sidelines at this stage, hoping that the dust will settle before, you know, re-engaging in foreign exchange activity. So I think the market is waiting for some kind of clear direction, some kind of certainty, and at this stage it's just not that forthcoming. And as a result, I think the risk still lies in a weaker rand. Nothing fundamentally has changed here, so buying dollar dips remains our preferred strategy.
What's the trading range you've pegged out for the local unit against the dollar today?
Well, we think that 775 is going to be very stubborn to the downside, and then heading back up towards kind of the 8 rand handle, very plausible. It's very difficult to call trading ranges at the moment because of this volatility that you've just mentioned. But I think, you know, you just got to go with the trend. And as I say, I think the pullback that we've seen recently, the last few days, is probably now running out of steam, and I think we're going to be heading higher.
Well, a lot of this will be dependent on what emanates out of the Eurozone in terms of actual implementation, following the kind of rhetoric that's come through. We've come across a commentary from RBS lowering their forecast specifically for the euro through to the end of 2012, and citing expectations of an interest rate cut by the ECB next month that will, of course, narrow the single currency's yield advantage. What's your outlook on that front?
Yeah, Alishia, for some time now, much to a lot of criticism, we've been calling kind of 120 on euro dollar, and we're still on track for that, I think. There's still a lot of uncertainty around this European debt crisis, and I think, as you mentioned, that kind of yield premium that the euro was enjoying is now probably going to dissipate. I would agree that there probably will be an interest rate cut from the ECB in the coming weeks. So I think that we're headed downwards in terms of euro dollar. And once again, it's a function of the global environment that we find ourselves in. When growth is low, you want to have a weak currency. And Europe needs it now. The dollar's had it for quite some time. And I think emerging market currencies also want to have that weak currency. So I think a rand up above 8 is actually just what the doctor ordered.
Yeah. In the meantime, the dollar, which along with US Treasuries has surpassed gold in recent weeks as an asset class, for safe haven seekers, has been rising against a basket of currencies. To what extent does this surprise you, Michael, that we continue to see the support for the dollar as a safe haven investment at this stage, where, as you touched on earlier, we had disappointing data in the form of economic news filtered through from the US yesterday?
Yeah, it doesn't really surprise me because we've seen this movie time and time again where it doesn't matter how bad the data is out of the States or how dismal the global growth outlook seems, people still have faith in the greenback as that ultimate reserve currency. There's going to be some shift in reallocation towards euro and maybe the Chinese yuan, etc. But that's going to take time. In the immediate future, we are still going to see the dollar enjoying that reserve currency status, and as a result, in times of turmoil, people are going to be buying US Treasuries. I think when it comes to gold, there just has been some liquidation of some of the contracts again for liquidity purposes due to all this ongoing turmoil in Europe. But you know, don't write off gold at this stage of the game. I think it's going to benefit from its safe haven status for a number of months still, and US Treasury yields are going to continue to plunge. So at the end of the day, it's all about finding what very little safe havens are left out there, and that's going to attract the attention.
Of course, we will be looking forward to Bernanke taking to the podium later this afternoon. So all eyes on the kind of announcement that comes through from his end. Michael, let's leave it there. Thanks so much for your time this morning. Michael Keenan is head of Forex Research over at Standard Bank.